trader. All right, looks like we back at it on this Tuesday. Had a great Labor Day weekend. I hope you all did as well. Was able to chill out with family and friends and eat good. But we back in the driver's seat today. Today was a crazy day, man. I must admit, I overtraded. It took probably 2 trades I should have taken, which cost me, even though I am profitable for the day, up 397.50. So, I'm in the green, not in the red. But those 2 trades I took, they hurt. They hurt dearly. I paid the price for those 2. But we'll get right into those trades for the day. The market is acting a little funny today. We got this big down candle, gap down from Friday. Here's Friday's close, 24.74, and we opened this morning at 24.61. Couple reasons why, whether it's North Korea and their propaganda to let us know they got missiles, or let the world know they got missiles, or the Congress saying it may shut down here shortly due to budget reasons, whatever the reasons are, it really don't matter to me, because I have to be able to trade an up market or a down market, and that's the whole purpose. You can make money trading up, you can make money trading down, but you can make more when you can trade both ways, both directions. So this is a 1-year daily chart of the S&P futures. If you look, we're actually getting a rounded bottom pattern form right here. Now, if this S&P future can push higher Wednesday, Thursday, then we'll look to take a long position up through this high of 75 up to 24.88. If it can't and it goes lower, take a short position underneath this 20-period moving average of 24.46 down to 24.10. So that's the setup right now on the ES futures. But let's look at the trades that we're taking today. First trade this morning was HMY, which is a gold miner. My whole purpose of taking this trade was if the market's weak, gold's probably going to be strong. So the miner should look to take off a little bit. Daily charts, you can see, got some support down here at 156. Getting higher lows up through here, up into this $2 range. Starting to increase in volume as well. So today's candle entered a long position around 211, and on this 5-minute chart you can see what happened. Had an overnight high of basically 211, so I said, all right, if it breaks above 211, I want to be a buyer with increased volume. I had volume go up just a little bit, so I got long right here around 212. We pushed up to 214, then immediately dropped back down. Ended up hitting my stop and took a small loss, roughly $210 loss on HMY. And as you can see, it's pretty much going sideways right now. So I'll stay away from HMY till there's more clear direction, defined direction on what it wants to do. Don't get married to a stock. Don't get married to a trade. Stay single, stay open-minded, continue to look for other setups. Look for other stocks to trade. Look for other sectors to trade. Find stocks that actually got volatility flowing in or flowing out, depending on the direction that you're trading. And that's how you become a successful trader. You don't become a successful trader by having tunnel vision on one stock. Next trade I took was PCOM, and it was a great setup. At the beginning, it was a great setup. Bad thing is I got in too high with too many shares. So we had this bull flag formation right here, as you can see. We got our bull flag. Here's our flagpole, and we got this down decreasing triangle formation with support down here at 935. So what's the rules on a bull flag? When you're trying to enter a bull flag, you only enter when you have a candle that's breaking the high of the downtrend with increased volume. So I need a candle that breaks the high, which is 970 of this candle, or some people like to say the actual wick, which would be up here at 994. So I need a candle that's breaking that high with increased volume. So I need volume to be above, what that, 126,000 shares. So let's see if I even met my criteria to enter this trade. The very next candle, it breaks, forms a new high. I enter the trade. I actually get filled at 10:07. It would have been a lot better if I got filled down here, somewhere between 971 and 990. But hey, that didn't happen. Got filled 10,000 shares at 10:07. Got volume of 86,000. Now 86,000 is lower than 126,000. So right there, I already didn't meet my criteria entering in this trade. So rule 1, I got in too high. Rule 2, I didn't meet my volume requirement to enter into the trade. Let's look at the next candle. Next candle is a doji candle. Volume's decreasing a little bit, as you can see. Buyers and sellers are equal, so we're not actually moving up, we're not moving down. Buyers and sellers are neutral. Next candle, you finally get that spike in volume we were looking for. You got the volume spike, you got a big high, a big candle, still above the, this downward decreasing high. So I'm still in the trade. It hits 1023, which is great. Closes at 1011, so it's actually closing higher than where I entered at 1007. So we're good. I'm good. Next candle, downward doji, decreasing doji. Buyers and sellers are kind of equal, but a little bit more buyers than sellers. So you got a red candle because it opened at 1015, closed at 1005, and from there it continues to fall. And I get stopped out roughly at 960. So I didn't meet my criteria on volume, got in too high, too many shares, 10,000 shares. I've been better off getting in with just 5,000, between 2,000 and 5,000, and shouldn't have got into actually this candle. Technically could have got in at 994 and held it to roughly 919, 920, take half off the table, let it come back, hit my stop, break even, and been out with a profit. So you got to stick to your plan when you're trading. You got to stick to your plan no matter how long you've been playing this game, doing this game. Don't get anxious, don't get fearful, don't get greedy, don't get lackadaisical. Stick to your plan, and your plan will actually keep you from saving money. If I would have stuck to my plan, I wouldn't have lost $900 on this trade. But since I didn't stick to my plan, now I got to pay that price. So from the first 2 trades of this morning, I'm down $1,300. And it was only what, 10 o'clock when, 10:30 when all this went down. So I'm down $1,300 and thinking to myself, do I call it a day? Do I still try to trade, make some money back? Well, my max loss on the day is 2,000. So if I lose 2,000, no matter what time it is, I'm done. So I was already down 1,300. Next trade was CDZI was the next trade, and it actually was a profitable trade. We had an overnight high of 13.13. So I said I want to enter this trade above 13.13 if it ever happens. It did. Right here on this first 5-minute candle, we broke above 13.13, and boom, I pulled the trigger. You got to be quick with your draw. You can't wait. You can't be indecisive. Know your pre-market setups. Look to see where you're going to enter and exit a trade. So I entered the trade right here. Got filled. I think it was around 13.20. Got filled. Took half off at, I took a quarter off at 13.45. Another quarter at 13.73. Another quarter at 14. Then the rest at 14.51. So that was a phenomenal trade. I knew my entry. I knew where my stop would be. I moved my stop up every time I took some off the table. Kept moving my stop up, not to give back profits. Once you have money on the table, you got to take the money off the table. Once you take it off, okay, then you're in the driver's seat. Now, when you're in the driver's seat, you can make better decisions because you're not chasing. You're not chasing that 10-cent gain or 20-cent gain or 30-cent gain. You have it. You have it locked in. It's in your account. So when you have the opportunity to move your stop up and take money off the table, you better do it. Or what's going to happen, the stock or whatever you're in is going to roll back over and start taking your money back. It's going to start taking that money back. That's why I took money off the table as it went up, exited the entire trade up here around 1450, because I knew, hey, this stock has ran, from 930 up in 941. So basically 10 minutes straight, this stock didn't do anything but go straight up, which is great, but it's also a recipe for disaster for those that, don't take profits. You don't take profits, hey, this stock goes all the way back down to 1230. That's roughly $2, a $2 drop from 1450 all the way back down to 1230, 1213. That's crazy. So take profits when you can take them. Put the money in your account and do something else with it. Don't get married to these stocks. Don't get married to any one trade. Don't chase money. Chase the actual setup. The setup will bring the profit to you. So if you got the right setup, meaning you got the right entry, you know where you're entering at, you know your entry point, you know where your stop is. So if I'm entering above this high, I know my entry, my stop is going to be at the low of this 5-minute candle. I know I'm going to scale out as it moves up. So when it hits 10 cents, I sell a quarter. When it hits 20 cents, I'm selling half. When it's another 10 cents, so it'll be a total of 30 cents from my entry, I'm selling another quarter, selling another half, then exiting the trade in its entirety. You scale out as it moves up. So that was CDZI. Next trade I took was JNUG, which was actually a great setup as well. Just I didn't see it early enough. So if I would have saw it back here where, this high of 2360, I would have entered in above the high of 2366 and actually rolled this thing up. But I didn't see it until it broke above this descending trend line right here that I drew. I saw this big candle. I said, okay, well, if it breaks back above that, I want to be a buyer with increase. If there's increased volume, got the increased volume from roughly 200,000 shares. Previous volume was a little over 100,000 shares. So I got my increased volume, took a long position, 2,000 shares, hit my first target price of 24.39, sold a quarter, hit another target, 24.50, sold half, then sold the rest at 24.59. And as you can see, as of right now, it's just moving sideways to up a little bit. It could possibly break back out, but hey, y'all can get in it. I'm done for the day. I am done for the day. Made good money on that. So JNUG made $205 on that. So between the first 4 trades, I'm almost just breaking even. It didn't come to my last 2 trades of Snapchat and ES futures where I'm actually starting to make some money back, and really get back green on the day. Snapchat was some continuation weakness from last Friday. Pull up the daily chart so y'all can see. So last Friday we had this candle. We entered in a short position below this candle, which was 24.43. So right here when Snap went below 24.43, we sold it short for a nice profit down to 14.05. Then today I said, well, we may get a little pop early in the morning, but if that pop can't hold and it falls back below this low of 14.27, I want to be short, and that's exactly what happened. We got our early morning pop, boom, right there, all the way up to 14.57. So if you was in that, that's great, but you should not have stayed in it. If you look at previous history, which was Friday, Thursday, Wednesday last week, the stock was telling you that it's trying to move lower. They do not want to own Snapchat at this price. This is too high of a price. You're starting to hit resistance up here around this $15 area. So if you're hitting resistance and rolling over, that lets you know people are starting to short this stock. You want to be short. If everybody's long, if everybody's short, why would you want to be long right now? So it's you got your descending trend line. This stock is falling. So we took a short position. First short was, actually took two short positions. First short was this on this candle, right? This break below 1427. It's roughly 3,000 shares. So shorted down to, what's this, 1418, and then added to the position another 1,000 shares and ended up getting out right here at 1412 for that little over $302 gain on the day on Snapchat. So Snap was a good short trade. You know, the market's weak, the overall market's weak. We know Snap has resistance around $15. That right there lets you know you want to be short Snapchat. As of right now, can things change? Yeah, things can change. You know, things change just like everything else. Things change, and you have to be able to adapt with those changes. You can't just sit there and say I'm gonna stay short, and the stock is not rolling back, going long. You can't be say, hey, I'm gonna stay long. I don't care if that's resistance or not at 15. I'm staying long. Well, that's okay if you were a swing trader. You know, if you're going to hold it for a week or 3 months or a year, that's fine. But if you're a day trader, you'll blow your count up. And then you'll be looking at yourself or telling your spouse, hey, this is what I did, and I'm sorry that I did it. I'll never do it again. But you will do it again unless you learn how to correct it. You got to learn how to correct your mistakes. It's good to make money. You can learn a lot when you do make money, but you also can learn even more when you lose money. Took a trade on United States oil. My thought basis here, hey, as long as we got these bad storms in the southeast affecting the amount of oil that can be drilled or produced, U.S. oil will continue to go up. And I mean, technically it is. It just didn't go up while I was in it. It closed Friday at 966, opened at 991, so a little over 30-cent gain. So I took a long position above this high, which was right here at 999. Actually got filled at 999. We dropped down, pushed back up to $10, fell right back down, and I stopped out at 995. So that was a $400 loss between 1, 2, 3, 4. So 15-minute candles, lost $400. Knowing what I know now, that USO is not going to move, and it's probably not going to move that much due to the volume. You got 1,000 people buying, 1,000 people selling. It's pretty much equal. You know, even though these are large share sizes, they're canceling out one another. There's no imbalance. You know, buyers need to be greater than sellers if you're on the buy side, or sellers need to be greater than buyers if you're on the sell side. And since that's not taking place, this stock is not going to move. It needs some type of volatility to it to move, meaning to actually go up in a dramatic fashion or go down in a dramatic fashion. It's not going to happen. Now, it may be a great trade to hold, you know, for a week or two, because you got this big gap. It may come back, test that gap, push back higher up to this 200 period moving average. That's fine, but I'm not about to hold it. I don't have time to hold it overnight or for a couple weeks. I'm not thrilled. I'm not thrilled about United States oil to be able to be holding it for a long period of time. Last trade I took was on the ES mini futures. I actually took two really good trades. So if you look in the overnight session, you'll see that there is a level of support right here, 2465. We hit 2465 right here around 2 in the morning, or 12, or a little over, sometime last night. Came back, hit it again around 6 in the morning. We opened up, pushed down, pretty much hit it, came real close to it, pushed back up. I said, well, if this level can't hold this 2470, same level we've been touching all night, if that can't hold, then I'll go long, meaning the stock is going higher. But if it can't hold, I'll get short with a break back below 24.65. And that's a trading plan. I know where I'm going to get in. I know where I'm going to get out. Having a plan in place keeps you from, I ain't gonna say it keeps you from losing money, but it keeps you from making bad decisions. When you don't have a plan, you make bad decisions because you start to chase stock or chase patterns that really are not there. So I got in, took a short position at 24.65. Sold those 5 shares right here at 24.60. Got a pull back. I said, well, if it gets back below 24.65, I'll short it again. Short it again right here, 24.60. And sold those last 5 shares right here. Where is it at? Right here, 24.53. There was some more action down here. You could have stayed short a little longer, but I was cool. Like I said, I was down $1,300 at one point. Made $700 on those 2 ES trades. Well, total $700 on those 2 trades. It's like, hey, I'm not going to overdo it. I've already overdone it, so I'm not going to keep, trading when I'm back positive. I'm back positive for the day. I'll let that be that. So ended the day roughly, a gain of $397. I'll take it. Every penny you add to that piggy bank increases the amount, increases the amount of money that's in it. So, every dollar I add to my bank account increases my trading power. And that's what it's about. Increase your trading power. Now, I'm the bearded trader. Freedom exists not to do what you like, but having the right to do what you ought. Y'all have a great day trading. Have a plan in place. Trade your plan and plan your trade. Stay profitable. Bearded Trader.